Most people are stuck in a system designed to work harder and not smarter. We're here to expose the strategies, the loopholes and the life hacks the 1% use. This is universal basic knowledge.
How can I generate extra income from the money I already have without taking on extra risk? Most people think their only options for making money in the stock market are buying and selling shares. But did you know there's a way to get paid for owning each stock? Enter covered calls, a strategy used by sophisticated investors to generate consistent cash flow. But how does it actually work? The concept of a covered call is simple. You own shares of a stock and you sell a contract that gives someone else the right to buy your shares at a set price by a certain date. In exchange, you get paid a premium, which is cash in your pocket regardless of what happens. Here's why the 0.1% love it. It's a way to create passive income from the assets you already own, no extra investment, no major risk, just a strategic way to maximize your portfolio's earning potential. Let's break it down in an example. You can do covered call strategy with both stocks and also you can even do it with crypto. I'm going to use Bitcoin as an example here because it's one that I've personally done. But an example here is that you own said stock, right? So let's just say you own Tesla and you own it at $250. And then say you own one Bitcoin and you own it at today, the price of Bitcoin is approximately $85,000 right now. Say you owned it at $50,000. It doesn't really matter what price you owned it, right? But the price of this asset going up or down is what matters here. Now, the way that covered calls work is that there's different timelines, meaning that the time and date. So if I own one Tesla by April and it's now March, that's a 1 month time period. And the longer the time period, potentially the larger the premium, and the shorter the time period, the smaller the premium, meaning the amount of money that you're going to get. Now, the reason that you would do this strategy is to yield extra income, but there are some risks to it. The way that the covered call will work is that today's trading price for Tesla and today's trading price for Bitcoin are not the prices that you paid. Let's just assume that the price for Tesla right now is $300 and the price for Bitcoin today is $75,000, as an example, okay? And we're saying that we are in March. Or we're just gonna put March 1st here for everything as the example. Now, the covered call option will say that by April 1st, I am going to buy a covered call on this asset that it doesn't reach $325, right? And for that right to have that asset at $325, I'm willing to pay you an example of $10 for every share that you own. So these are random numbers I'm just making up here, but you'll understand here in a second. Now say that it's March 31st and some news came out that Tesla is now the vehicle that is going to be powering the entire United States army and infrastructure. What will likely happen at that point in time is that Tesla stock will surge for whatever reason, right? And so the stock surged to $450, okay? And so even though you own this stock at $250 when you bought it, and now today, the day of March 1st, when you decide to do this covered call strategy, it's $300. And this news came out 30 days later, which now makes it $450. You made an agreement on this day, on this day where it was $300 for $325. So the closer that these prices are together of whatever today's value is and the covered call price strike is the more money you're gonna make. So if you do this 4 months out, you are basically saying that I'm willing to sell you my shares at $325 no matter what happens. But if the price stays below $325, you get to keep that share. Nothing changes, but you get to keep the premium too. So that is the idea of the covered call. So here's the concept. So this happened, say this news happened and it's $450. So now you're like, oh wow, so I am, I'm in the profit by $200. If you hadn't done the covered call option, you'd be $200 in profit per share that you own. But because you did, you got a little bit of income, but you are capped at $325, right? Because you made an agreement with this person at $325. So that means that you are selling the shares at $4.25. You do not get that $125 upside. And essentially you will get whatever the premium was. So say that the premium was $10. So in essence, in this case, you're going to get $10 plus $75, the difference between the price you agreed on and the price that you bought it for. And so your total value is $85. Okay? But now let's say that it turns out that that was fake and they aren't going to support the news on it. And on April 1st, everything crashes down again and it goes back to $320. Well, in this case, you still got the $10 because nothing happened, and your value appreciation is still $75 or $70, right? And so you are in a better situation here. So the only risk that you are underlying taking is you're missing out on upside, right? That happens. If the stock plummeted below that, right, it would go to 275 or 250, you would still get the $10. So the point is that if you're going to own an asset and you don't mind, this is a great way to make extra income. An idea of additionally is that if you want to still have exposure to that asset after this set time period, so in this case it was April 1st, you can just go and buy that asset again on April 1st if you want to. So you're just missing a little bit of the profit on top of that. This is a great way to essentially build a little bit of extra income, and you are obviously taking very little risk because you already own this asset. The same thing here with Bitcoin. So if the value of Bitcoin, very much more volatile asset, the premiums on assets like a Tesla, Tesla relatively for a stock is kind of volatile. The less volatile the stock, the smaller the premiums are going to be, because it's not like a company like Microsoft or Apple is going to go up and down 20% in value. But where this is really interesting is if you're a big owner in crypto assets, specifically Bitcoin, which is a very volatile asset, you can essentially have one Bitcoin and say the price is you're saying, hey, I'm gonna do this at $80,000 and today's price is 75, and we do that same April 1st example. Now, since Bitcoin has a possibility of going to $100,000 in that time period, and that's pretty common, the premium might actually be kind of high, especially if the market's hot, right? And so essentially people are willing to pay you that premium to have that right. But if it doesn't hit that price, you get the premium, you get to keep your Bitcoin, and you can make a lot of additional income in this mechanism. And the worst comes to worst, as long as Bitcoin doesn't hit the price that you agreed on, you get to keep the premium, you get to keep your Bitcoin. Right? And so this is an excellent way to make additional income without taking on additional risk. And even after that call period happens, you can still buy that asset again and have exposure to the asset just like you would normally. Multiply this over months and years, and you've got a system that prints you money while you sleep. Most people let their stocks just sit there, but the smart money, they put their shares to work. Covered calls give you an extra stream of income without having to buy more, sell off, or gamble in the market. And before you try this strategy, I am not a financial advisor. You should definitely talk to your financial advisor about this strategy. It's something that I have done. I've found a lot of value in it, but it's something that you want to make sure that makes sense for you and that you are doing correctly. So definitely talk to your registered advisor agents and use this for informational purposes only. If this sounds interesting to you, join our free community. You don't need to be rich to live like the 1%. You just need to learn what they do. With the right strategies, you can 10x your lifestyle without spending any more than you do today. The difference is not income, it's information. This is universal basic knowledge.